Wall Street and Las Vegas used to be worlds apart, but the rise of prediction markets is now bridging the line between investing and gambling. New forms of speculation, some with absolutely nothing to do with traditional financial markets, are rapidly making their way into the toolbox of popular brokers. Online platforms like Robinhood and Interactive Brokers now let investors bet on sports and politics, among other things, and Wall Street is juicing up its offerings to appeal to the betting crowd. But should wagering and investing be combined? And what guardrails are in place to protect investors in these highly speculative markets? On this IBD Explains, we discuss the rise of prediction markets and what investors need to know. Here with me to break things down is IBD's personal finance and management editor, Matt Krantz. So, Matt, how would you describe predictive markets and how do they differentiate gambling from traditional investing?
That's a great question. I think that there's a fine line between gambling and investing. I was always taught that we don't even want to use the word bet because investing is about long-term goals and putting your money away for obtaining, buying a house or putting your kids through college. Where gambling is typically like a short-term kind of bet on a fluctuation or a random event. So they're very different, but they're starting to kind of come together.
No, I was always taught the same principle, Matt. And there also just seems to be more of a widespread concern in the industry of brokers turning into bookies. What are some of the arguments that you're hearing against these types of markets that you saw in your reporting?
Yeah, so I think there's a concern that people are going to treat their 401k like a slush fund, like fun money. And they're going to, instead of going to Vegas, they're going to take these wild bets on what interest rates are doing or what sports teams will win. And I get that. It makes total sense to me that there'd be concern there. But on the other hand, the people that are in favor of it think it's just another way to hedge your bets. If you're exposed to higher interest rates, you could take a wager out to hedge that. So it's one of these things where it really depends on your point of view. And if you think gambling is bad and doesn't belong in investing, then you're going to be kind of against these new developments.
Yeah, and what do brokers like Robinhood and Interactive Brokers, use to counter this perception, particularly as you said, presenting these prediction markets as a hedging mechanism?
That's a really good point. So Robinhood wants to be like a one-stop shop to trade anything. So they kind of are seeing themselves, I think, as more than just a broker. So for them, adding prediction markets is just kind of part of an evolution. Over at Interactive, they've always been about options markets and options investing. And that's also kind of a bet. As a result, they think that their investors are sophisticated enough to kind of know the difference between investing and trading and betting.
And you talked about some of the long-term point of view for investing versus the short-term point of view for these sorts of bets. But what do you think the ethical responsibilities for a broker? What should those be when you're introducing these highly speculative products to a retail consumer base?
That's what I think the industry is going to have to come to terms with. Right now, they think that so Robinhood, you have to kind of expressly ask to have access to these markets, and they kind of keep them separate from the investing part of the app. And they think those guardrails are adequate to protect people. Also, there's nothing illegal here. This has all been looked at by regulators. There are some lawsuits pending. Some of the states are pressing against these developments, but there's nothing untoward about it. But I think a lot of the people who are worried about it think that investors, they don't really know what they're buying. And I think there's even concern with short-dated options that people don't know what they're buying. So it's kind of up to the investor to kind of protect themselves, which, as we've learned in the past, doesn't always work.
Are there any differences or similarities in risk exposure between a traditional sports book or a prediction market platform? I think one of the main things that comes to mind is like liquidity and volume. What sort of challenges do these predictive markets face?
Yeah, so I think the biggest distinction that they try to draw is that you're not betting against the house, you're betting against other investors. So the line is set by other investors, so you can kind of step away. And it is regulated by the CFTC, and it is important to note New York Stock Exchange their parent company is taking its positions in some of these prediction markets as well. So, yeah, no, I think there's some safeguards, but it's still really up to the investors to know what they're buying.
And they obviously wouldn't be doing this if there weren't money here. So, what do analysts see as the revenue opportunity for these prediction markets? And what strategies are brokerages utilizing to get customers onto these platforms?
It's really exploding. So Robinhood posted billions of contracts just in the last reporting period. It's taking off, I think, faster than anyone expected. Everybody likes to gamble, apparently, and these systems make it really easy to do. And it's all in one app, and you don't have to go anywhere else. You don't have to open a brokerage account with or an account with a company in Bermuda or something like that. So I think it's a big opportunity. So I think that's why the industry is looking at it so closely.
And I know you alluded to some legal issues here, but are there any regulatory or legal challenges that these prediction markets have to contend with? And are you allowed to use them in states that do outlaw this type of sports gambling? Are you able to access predictive markets there?
Yes, and again, I want to make sure we know that nothing's being done illegally here. This is all above board. It's all been approved by the appropriate people, but there are some states that are suing to stop it because there are some states, I believe California is one of them, that is kind of seen as a little bit of a loophole. But it's again, to reiterate, it's all legal and it's all above board, but I think the regulations will change.
And how are investors using these predictive markets? And really, how should they be approaching these types of speculative platforms when it comes to managing their money and their portfolio?
Well, so Interactive thinks that is a good way to hedge. So if you can take bets on like interest rate directions to help kind of mitigate some risk in other parts of your portfolio. I guess that kind of makes sense. But what my fear is that people are going to start finding weird correlations. They're going to say, well, if my football team loses, that means I should make money at other parts of my portfolio. They might look at weird correlations between like the Dallas Cowboys winning and my stock market going up, stock portfolio going up. I think that's the danger when people start doing that. So if you're going to do these markets, make sure it's small and make sure you understand that you can lose everything.
All right, Matt. Well, thank you so much for your insights today. It was great speaking to you.
All right. Thanks for having me.